Another bearish week, another red candle for gold. Most important point to note here is it failed to break below 1910 so far. It has respected the levels so far. So what to expect next week? Can we expect another red candle, sharper red candle, and can we expect it to achieve the bottom of this channel, or is it looking forward to a pullback from here? Which position you should take trading gold next week? We will see with the help of charts first, followed with indicators, and towards the end, we will summarize the observations and conclude and give you the trading levels to watch out for. Do watch till the end, and those who are new, let me share, this is a weekly review and I do provide my daily updates on gold twice a day, first with the Asia and Europe session, next with the US session. Both are very important and it definitely helps in your day trading decisions. With that, let's start. Also, your every like, every comment is a great motivation for me. It inspires me to deliver consistently every day and to the best of my abilities. So do like, do comment, and also just share and subscribe is a great support. With that, let's start. First, let's have a look at the daily charts. On the daily charts, we can see first of all the resistances here and here are important. It has failed to break past 1985, and you can see similar movement here. See what has happened here is happening here again. So in sum, so far it is trading within the box as of now. And if you see the limits of the box, you will also find that this zone here in between 1910 1925 is very critical for gold here. Yes, a break below this zone till 1900 also, the expectation of a recovery can be there and we can expect it to recover. Below 1900, it is going to be the breach of this channel, and then we can see a good bearish move here. Now definitely this is a good support zone for gold here. Now let's come to the nearby charts, and if you observe the last week's chart, the resistance was seen at 1946-47, where we have found gold failing to stay above these levels and since then consistently traded bearish. If you also observe the candles here, see prices tried to move up and then again and again got a push on the downside and have closed in red here. So that is first observation. Second observation is that the candle size is consistently diminishing. It is reducing in size, suggestive of that the bearishness has diminished. Next is look at the last candle. It closed in green. It failed to stay bullish. At the same time, it did not try to go on the downside. Yes, it has already seen in the lower lows at around 1910 levels. What does this mean? This could be a possible reversal indication. Now, when should you treat this as a reversal of trend? Yes, if it stays above 1930-32 zone, first levels. If you see gold staying above 1930-32 and then 1946.50. If these zones are breached, then you can say that gold has reversed and it is going to break this channel, and possibly we are going to look forward to a reversal from here. Yes, that possibility exists here, but we have to note first of all the next week has to open on a positive note. Then second, it has to cross by these resistances on each day. I will definitely observe, see first of all rise, retracement, drop, retracement. Now there could be only retracement, not a reversal. So 1946.50 zone is something you should watch out for, only above which you should treat this as a reversal. Now this is on the daily charts. Also now let's have a look at the weekly charts. On the weekly charts, what has happened here is, see triple bottom, the sharp rally, sideways bull run, retracement, rise, retracement. Now if you look at, see if you consider 1800 as the bottom here, because see this rise has started from 1800 levels. If you still observe, you will find this is still forming a flag here. Now the bottom of this flag is somewhere here at around 1800 40 and 50 zone. Yes, that should be the bottom here. You can observe, you can just connect the dots here, and also there is a gap here to be filled. So there is a likelihood that it can try to attempt and achieve these levels. There is a possibility for this. However, in the near term, still till 1800s are respected, we can still see gold is forming a bullish flag. It can break out either ways in a quick time from here. Yes, couple of green candles and we can expect a breakout. Now look at the weekly charts here more close. You can observe increasing bearishness here. On the weekly chart, the body size has consistently increased. This suggests that the bearishness is also increased. At the same time, observe the phenomena here. You can see body size here was sharp bearish. It has dropped lower and then showed a pullback, and then this reversal has happened. So now you have to observe. First, on the downside, you can see last three candles, almost the bottom of these candles are beautifully aligned. Now for next week, even if you look at next week, you will observe that 1900 could be the lows which we can look forward to, and this is going to be a great support zone. And hence, only if you see gold breaching this channel below 1891, you can treat that as a breakout. Now we are only looking at a breakout as of now. Yes, achieving these lows also we can see a pullback, and we have to watch, see what has happened here can replicate also. Now why this could replicate, I will share this in later stages of this video, but right now you can see the bottom of this channel or the lows of these candles are now limiting itself at around 1900 levels, and that is why I say below 1891 is where the bears will take over. And at the same time, a perfectly symmetrical candle can be expected, and a breakout above 1950 is where you can see more bullishness or a reversal confirmation. So this is another observation here. Now let's have a look at the monthly chart. On the monthly charts, you can observe flat opening there. There is no wick this time, and see the month has just begun. We have hardly seen 9 trading sessions. Remember, a flat top is seen here. The possibility of it creating a wick exists. At the same time, now connect these three lows for the previous month. You can see almost, see these two are aligned, and we can see gold is precisely sitting at this bottom here. So this is something we should watch out closely. And why did I say, see what could happen possibly, even if it has to stay bearish in the forthcoming month, what could it could try to do, achieve the lows here and then show the pullback for the rest of the month till towards 1940-50 levels, and then maybe if next month has to be bearish, it can leave the wick on the tail on the downside for it to continue with the bearish momentum. Any breakout beyond this zone, that is the candle turning green, definitely would be a good indication for the bulls that gold is willing to fly and it can achieve higher highs as well. Now if you look at these two candles, see bearish candles, if you consider this as a symmetrical candle, almost symmetrical it is, the chances of this candle to stay bullish, to stay green exist more. That is my expectation, that it can probably reverse. This is the beginning of the month. There is still much more trading sessions left ahead of us in August, and hence it can show you a pullback. So be watchful here. Now let's have a look with the help of indicators. Now indicators on the monthly charts, moving average is trading with divergence and bullishness. The prices diverge from the moving average, and now it is probably looking forward to converge till towards the 20 period moving average. Whenever we have seen the prices diverging from the moving average, it tries to converge, and this is what is happening as of now. So if it stays below 1891, then we have to ensure that it can try to attempt and achieve 1870, 1850 levels as the next targets in the month of August itself. Now see, Stochastic has dropped here. It is looking downwards. The MACD, now see the MACD here. This is first wave. Second wave has just started. The candles are green. It is trading with divergence. Now this candle is trying to converge a bit. Yes, it has the potential for it to diverge. It can reverse completely. So we cannot conclude as of now that it is trying to cross over for sell. It has all the potential to continue with this bullish wave on the upside for next few months. You can see this crossover coming after months in gold, and hence there is a possibility for it to stay bullish. If you look historically for last 20 years, see gold is crossed over here, then this was the crossover in 2005, and it is almost now crossing over at the same zone. Hence the bullishness is here to stay in gold. That is my expectation if it is not crossing over for a sell in next couple of months. Now look at the weekly. On the weekly chart, see moving averages diverged here and are still trading parallel, are still trading in the bullish zone. At the same time, The prices were divergent from the moving averages. It has again converged now, trying to attempt and achieve the 50 period moving average at best, which is going to be a good support, and that is why I say 1900 1891 levels are going to be the strongest support zone for gold here, below which you can expect that it can try to move till towards 100 period moving average sitting at around 1850 levels here. So this is one observation on the weekly chart. Second is look at the stochastic. This is also dropped now, and see previous drop, two drops here where we have seen gold hitting the bottom. This can stretch a bit. Let's watch out more. MACD on the weekly charts is divergent, bearish, looking downwards. Now if you look at MACD here, see first wave and second wave has started or initiated here. The bearish side of this wave is continuing right now, and it is not showing any signs of conversion. However, if you look at the movement, it is still trying to trade in this channel here, so possibly it could reverse from the mid of this. If you look at RSI, this is also looking downwards, trying to trade slightly bearish. Now coming to the daily, on the daily chart, see important observation is the crossover amongst the moving averages. This is a bearish cross here. See here was the bullish cross, is tried to stay bullish but failing to do so. Now it has shown a bearish cross. Also the divergence is sharp and this is suggestive of bearishness here. At the same time, one must note that be it on the buy side or on the sell side, whenever prices diverge from the moving averages, it is always tried to converge. You can see this time it is just converged from the very nearby levels. Now if you look at the recent time frames, here also the prices are too much divergent from the moving average, and this also makes the 40 and 50 levels, 1940 and 50 levels, a great resistance zone. Hence this is something we should watch out for. If you look at the stochastic, this is extremely oversold on the daily charts. This calls for a probable pullback, which suggests that we can consider this as reversal and it can possibly show us a rise here. Look at MACD. MACD has completed its first bearish wave here, and possibility for it to now cross over and continue with the bullish momentum exists strong. You can see double bottom. After the double bottom, now it may try to trade in this channel where it can try to attempt and achieve the highs, which suggests that possibly there should be a crossover and we can expect a rise. RSI has hit a bottom, trying to look downwards almost, and now trying to stabilize here. You can see so possibility of reversal exists on RSI as well. So this is what we have now seen the charts, we have seen the indicators. Time for me to summarize and conclude and give you the levels to watch out for and trade for the next week. And before I provide you the summary here, first I have a couple of offerings. First is my mentorship batch. The 25th batch is going to start on first week of September. We only have limited seats to focus on quality, and hence you can reserve and book your seats now itself. Remember, learning is the first investment which can and only investment which can reap you lifetime profits, and hence join the mentorship batch, learn from the experts, try to capture the tools, techniques and strategies which can help you identify profitable trades. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description, and also you can be part of my Signals channel. Now with that, now let me summarize. See, first of all, we have seen that on the daily charts gold has hit a bottom here. It appears we have seen diminishing body size in the candles, and on the last candle could be a potential reversal sign. Yes, we may see a rise. However, we have to look forward to 1922 first, 1932 next, and then 1946.50 levels as the critical resistance levels on the upside. And any point of time, if it stays above 1965, you have to treat gold as bullish and you have to treat gold for a reversal here. On the downside, the critical zone for support on gold first is at 1908, 1910. If it breaches below this zone, you can expect 1901, and below that 1895, 1891. Till 1891, chances of a reversal exist. Below 1891, you can say the target is directly to 1870 and 1850 40 zone. You have to watch out. So now let me give you the levels. First, let's talk about the levels to buy. I will recommend here to buy at 1922 levels, and you can expect 1930 first target. Then beyond that we can expect it to hit 1938 and then 1946. 1946 and 50. This is a great resistance for gold. Any point of time, if you see gold staying above 1946.50, you can expect that the bulls are back in gold, and we can expect this time 1964 levels. Though the chances of gold hitting this zone, even if it stays above 1950, I do not expect it to hit in this week specifically. But yes, it will open the opportunity for next week for gold to hit 1964. Beyond that, you all know well, 1973, 1985. 1985, and if it stays above this, you can expect gold going to hit 2000 levels. So this is where we are going to see maximum resistance next week, and if it stays above this, in fact it can try to attempt and achieve these levels, but a pullback can be seen later. So this is something you should watch out for. Now, where to sell? First thing is, let's observe where to sell. I will recommend you to sell at 1908 levels. Below that, you can expect 1900, very important, 1895, 1891. Till here, gold is not to be treated as bearish. Till it respects, as long as it respects 1891-95 levels, I will not treat this as bearish. The chances of a pullback and a bounce back will exist strong. Below 1891, you can stay short. Do not think of a bounce back here. You can expect 1870, 1850 and 1836 levels. Yes, if it stays below 1891, the bears will take over from there and we can see a sharp fall. So take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Do note these milestones and trade accordingly. Join my mentorship batch, join my signals channel, press the bell icon, do like, share, subscribe and comment, which keeps you, and pressing the bell icon keeps you updated with the twice a day analysis. Also, you can be part of my free Telegram channel where you get the live updates. The link is mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.